If I can check the script on the side of the screen, and you guys give me a thumbs up here. We're coming to you from Virginia Beach, Virginia, this evening on our 41st live stream. I really can't believe it, to be honest with you. I love coming on every Friday, 9 o'clock Eastern Standard Time for you guys that are new to the channel. Certainly give you the opportunity to ping some questions. I think financial conversation should be much more open of a dialogue, and that's really the whole point of this forum, is to come on and drop your questions. I think we can honestly be very powerful as a group. I work as a team. That's all I've ever done. If the title of the video kind of caught your guys' attention, it should have. I wasn't trying to be smart. It's just I tend to look at things a little different. I hesitate to even comment sometimes on my interpretation of things, because I think for the most part, most people really do have good intentions or are well intentioned with their with their dialogue and what they're doing, what they're trying to teach, etc. I think Dan Locke was the individual who made the couple comments that got my attention, certainly, and some interesting thoughts and comments. Who we're appealing to on the Independent Investor channel. You guys definitely know where I'm coming from. I guess if I knew a way to wave a magic wand and drive around a Ferrari, I guess I could do that. I tend to live in the really real world most of the time. I get up very early. I go to work just like most people do. I don't feel bad for taking on that life. I support a wife and 2 children doing so, and I'm not the only one, okay? YouTube is a side hustle for me, okay? It's a side hustle. And I tend to make this channel a lot less about me than I do about the subscribers that come in and prescribe to the message every Friday. Throw down on a little bit of stock dialogue, a little bit of conversation about where the market is currently. I'm about as transparent as any of the other channels. There's some portfolio visibility going on right now on YouTube. I think that's cool. I really do. I do want to give some kudos. I know Ryan Scribner just came out with his portfolio video this evening. Pretty awesome, actually. You guys have to understand, I mean, being early in the 20s, he's setting a good model for what's possible in such a short amount of time. Definitely gave a shout out. I know Jeremy came out as well, rolled out some portfolio transparency. I just want you guys to kind of keep in mind and take that stuff with a grain of salt a little bit, because I tend to put a lot of value in the degree of how far you've grown your accounts. I'm pretty open with the fact that I've max funded my accounts, my Roth IRAs, for the last probably 4 or 5 years strong, okay? But before that, it was significantly less than that. And I started those accounts with $1,500. Now we've grown them to they're approaching 100,000 each. So I want you guys to really understand what's possible, what you're capable of. If you just take it from a builder's mentality, I certainly don't want you looking at those portfolios and saying, I can get there and I can get there overnight. It doesn't happen that way. But thought I would give you guys some transparency on what I did. I've definitely scaled back on some position. The market right now is bananas. Okay, everybody wants to be, again, I think it smells and it feels like euphoria to me. Okay, now you guys can tell me I'm wrong and that this market is going to ride off into the sunset. I typically have both of my feet firmly placed on the ground. And when the market does this, I don't jump up and down and start yelling and screaming. I typically get a little bit more cautious on my approach. Certainly still invested in a lot of positions, but I had some positions really run up. My best performing stock for the last 3 weeks has been Conagra. Conagra has run up. It took a 15% run up in that stock. I had one of my regional banks get taken over. That also ran up 12%. That was nice. I took some profits in BlackRock. BlackRock just went to the moon a couple days there. So I took a quick 5% profit there, just a trading profit. So just to give you guys some insight there, definitely scaled back. One of the guys in the group here hit me up and asked me about the sector specific ETFs that I had held. I've scaled back on those. Those have run up quite nicely. Guys, if you've been invested in the stock market, you've really you've done well for yourself. Don't get too crazy. Don't get ahead of your skis. Okay. I don't know if this market is going to continue on like this. Okay. I hate to just get on here and talk about my feeling, but if you guys want to know my feeling, I'm either going to be right or I'm going to be wrong. Okay. Let's say in a perfect world, I've got a 50-50 shot of being right or wrong. And I typically look at my exposure rate and question. My question is very simple. I had this discussion with my wife this evening to say, look, are we prepared for a downturn? Are we prepared for a 20, 30, maybe even a 40% downturn in the stock market? I'm not looking to scare you guys, okay? But if you look back historically, those things do happen, okay? I think the economy's strong. I think you guys that are starting your portfolios, whether or not being passive or active or both, I just would encourage you guys to always, and if it takes me coming on here every single week and reminding you guys the importance to just observe, all right? Take a couple seconds. I see I've got the happy couple in the group here. Very cool to see you guys, take a little bit of time to talk about that, and then you can move on. Okay, move on with your spiritual, your physical fitness, health, your diet, all that stuff that's really, really important that you work on. I just ask that you spend a few moments on your financial health as well. And I typically, I would consider the Independent Investor channel a source of coaching and mentoring, to be honest with you. I would love to be perceived that way. I would love for you guys to come on and really take my testimonial as just an example of what I'm doing, and appreciate the transparency. And again, everybody in this group has got something going different for themselves. So I've got Internet Munchies says, thanks for answering my question. I always come on a little bit before the live stream as well. Feel free to do that. That's a good opportunity to hit me up with some direct questions before we kind of roll. Because once I kind of get in my zone and talk, I like it. It's hard for me. I've got Lydia Santiago in the group here, and it's hard for me to sit back on some other live streams. I kicked into a live stream that was going on with Dennis on his channel, and he was nice enough. I think he brought Lydia onto the channel, and they did a really good collaboration, and I popped in there. It's hard for me to keep my trap shut because I like talking about finances so much, but they did a great job. But it's nice to see. It's really nice to see, and I'm going to really do my best on trying to bring the investing community together. It's really awesome that a lot of these young folks are providing that transparency across YouTube, especially across some of the larger channels. Definitely Nate's coming out with some really, really good content. Beavis is coming out with some good stuff too. PPC Ian is coming out with some good stuff as well. Always plugging those dividends, man. It's pretty cool. I'd love to see one of those channels pop in here one of these days. Maybe one of these days when we get big, we'll be a household name. We'll see. But hello, everyone. Nick and Melody here. My wife Melody wants to know if Yana likes to pick out her own stocks or not. Okay, Yana, you got a question. So I don't know if she'll come on or not. She's pretty. We shot a video together, actually. It was really cool because I wanted people to really see kind of how we talk about finances together. Yeah, so you got a question. She's pretty shy, seriously. Yeah.
Oh my God, what am I supposed to say?
No, it's okay. You can come on. So this is your question right here.
Hi, guys.
Oh, okay.
Oh
All right. So this is your question right here. Hello, everyone. Nick and Melody here. My wife, Melody, wants to know if Yana likes to pick out her own stocks or not.
No, not really. I'll let Ryan do the work. So Ryan is the one who is making the choices, and he always let me know. And I say, okay, that sounds great.
Yeah. So this is your new host of the Independent Investor Channel. I'm retired. I'm done.
Sure.
No, we.
No, I still have a lot to learn.
I think it's important because, you know, when I come on here and talk exclusively, I've done 275 videos about investing philosophy, and make no mistake, I think what we do is we invest together. Everything that I do, we do. That's just how I kind of build the portfolios together. I'm transparent with Yana. I tell her what we're doing and why we're doing. Like the discussion we had tonight about the stock market kind of being at an all-time high right now. What do? Do you just continue to let it ride? Do you just continue to let it ride to the sun and go up all day? You guys have to understand, remember, if you're just starting out in the market, I just helped a new couple, just like you guys, kind of look at their finances. And they said, Ryan, we don't like single stock investing at all. We want ETFs. So we kind of worked an ETF portfolio, and they were just looking to start out. If you're just looking to start out, who really cares what condition the market is in? But I try to provide that transparency. Yana handles the entire budget side of the house.
That's for sure.
Okay. So the budget and everything that we do as far as the inflows and outflows, that's Yana. That's what she does. And trust me, guys, when I'm putting forward the transparency on the channel, whether it be in the live stream or on the YouTube videos, I'm doing so from a perspective of a couple. Now, I know there's guys out there, single guys, gals, spouses, etc., young investors. Lots of investors will come into the channel and they'll understand, you know, that my perspective is just with us, that it's more us than about me. Okay. So if you guys hit Yana up right now, she doesn't have to be bouncing back and forth. I can continue to run the live stream. But
no, I know that Ryan does the good job, so I probably let him do that.
Yeah. So say goodbye to the next. This is I1 right here. This is I1. I'm I2. This is I1. This is the next host of the Independent. Thank you, Brandon.
Yeah, sure. Have fun, guys.
Thank you. Yeah. So that was a cool question. That really was. And I tell you, when we started together, we didn't have a whole lot. We did not. We did not start from money. You know, we have gone through some hard times. When you're starting from zero, all that money that I talk about, that's hard money. That's the stuff that's hardest to put on an investing scheme. That's why I premise for you guys, when you're looking to start now, I understand it's hard money. I understand. But just keep in mind that we're not in a recessed bull market. I've never really seen the stock market as strong as it is. But if you guys rolled through last fall and into Christmas, all the way up to Christmas Eve night was terrible. If you guys remember that volatility that came through, man, it was really nasty. But it's really one of those things that you got to kind of keep in perspective a little bit. I've taken some money off the table, sold Raytheon. Really, I did that comb over that I did of the stock market on all those stock picks that I offered you guys last week. I was up in almost every single one of those positions. Really, really good. I combed over and really did some good stuff. Really had some awesome luck, and that really made a lot of money this week. I'm very, very thankful. And I just thought it was time to go ahead and pare back a little bit. Kept the core positions, the cornerstone positions, right? This is what I did. You guys, if you haven't been keeping tabs on what I've got going on with the 2 taxable accounts right now, I'm with M1 and I'm with First Trade. First Trade's got about $3 grand. That's an entire stock portfolio with a couple shares of small cap in it. But I did go with the ultra aggressive recommended portfolio off of M1. The easy way to do it. Okay. I went in there, I picked the ultra portfolio, threw $1,500 in there, and we're going to see how that goes. It hasn't invested yet. I don't know what's going on. It's really kind of taken its time and delay. I don't know if I've got a function that's not working quite right. But anyway, we'll get that stood up. It's funded. It's ready to go. And I'm going to be building from the ground up. And I hope I don't offend anybody, but 1,500 and $3,000 in the first trade, I'm going to be building those up with you guys. So I'm going to be providing that transparency, and hopefully it kind of reflects maybe where some of you guys are. If you're starting, maybe you've got, 3 or 4 or 5 or maybe 10,000 in this market right now. That way we can kind of talk about stocks in our portfolio as we kind of look to build wealth together. That's what this thing is all about. It's all about just building wealth together. I will not consider this channel a success unless you guys have the opportunity to succeed. And that's the beautiful thing about this message, is that these key niches that I'm pushing through, these are all solutions that each and every one of you guys can deploy. Each and every one of you guys. That's why I wanted to push that video out tonight about why do people invest? This is crazy. I talked to my neighbor and he bought a stock. He bought all, crazy healthcare stock, and when it went down, people make up justifications as to why they don't want to invest, as opposed to hearing somebody like I was very careful with the justifications that I selected to offer during that video. I was very, very careful in offering those to you guys, but I meant every single one of them. And hopefully you guys can kind of come to those justifications as to how you feel about why you're investing, long-term goals, etc., those types of things. Just get you kind of I ask the rhetorical question so you guys can sit back and say, okay, I get it. I'm going to put myself on a program. I do have 2 channel creators in the group here. Lydia Santiago has already had her kind of call out a little bit. Great to see you back in the group. Obviously, awesome stuff, man. And then I've got the financial investor, man. I don't think I've got a more loyal friend of the independent investor channel, straight up. Then the next time I'm out west, I'm going to actually look him up and we'll be meeting. But Brent is really, really good. I really like the dialogue he helps me with. He's super sharp. He's probably smarter than me with investing, and that's fine. I'm not the sharpest tool in the shed. I can outwork a lot of people, that's for sure. That's why people call me the grinder. But bringing great minds together. I've got Jared Odell in the group here as well. You guys know he's one of those administrators in the Facebook group, give a great, great perspective. But In Munch says, thanks for answering my question, Yana. I don't like picking out the stocks either. Nick is also much better interested in that. I don't know. I tend to kind of balance. It really depends. I think women are really, really good at doing a lot of things at the same time, where I think men are kind of good at doing one thing. That's what I've noticed. I think she could be a phenomenal investor. It does take a little bit of interest in the topic, and the more together that you are, I think the better. The more you kind of explain, hey, listen, I'm not going to invest you in, high risk stocks. I'm going to invest you in some of these companies. Have you heard of them? Right? Absolutely. All right. So we can resonate with those companies and kind of move and understand why we're doing what we're doing. Not so much even with the stock side of the house, but why we're invested in max funding the Roth IRAs, right? Why we're working so hard to tax protect and wealth preserve money going forward. That's a lot of the discussion. But thank you for the question. That was really cool by you guys. She's shy, no doubt. So that was good. She's taking over the channel, man, for sure. It'll probably blow up. I'll probably end up with like 1.7 million views. And then I'll be like, geez, where does that leave me? In the doghouse, man, for sure. It's going to take over the channel. But I'm going to cruise up here. Got a heck of a group in here, man. I see Greg, Cammie in the group here. Awesome to see you guys. I definitely want to make sure that we're being engaging. But I definitely wanted to give you kind of the update on where we are with the 2 taxable accounts. I'm really satisfied with both platforms, and I've heard some really, really good comments come back from the folks who are using the free first trade. It's really fast. It's really good. Again, some of the frustration I had with M1 Finance, those still exist. Okay, I guess I'm just a little more hands-on of an investor, and it's going to help me be with what I think M1 is best utilized for, and that is for passive ETF and stock investing. You can passively invest in stock, but I'm telling you what, guys, if you're looking to be more active over your accounts, M1 might frustrate you a little bit. Okay, that's just what I'm seeing. I'd love Brent for him to back me up on that a little bit, because I seemingly I'm kind of the only one with that opinion. But I think it's really better if you want to take advantage of the fractional shares and look to build position, whether it be in those higher growth single stocks. You can do that. Dividend payers, that's fine. Whatever it is, just do it in a passive nature. I think you'll be a lot happier with that platform if you can align what it is you want from the platform with the right account. I really think you'll be a lot happier if you use it in a passive way. So really good stuff. A heck of a group in here. I've already the JP Morgan is coming out with, it looks like their own version of a Bitcoin or a cryptocurrency. That's kind of interesting. I will be looking into that. That's really cool. That's a lot of reason why we do this group, is to throw out those new ideas and see what's going on in the landscape. I have the one and only Doug Whitaker, who changed his name, so I would have to say that over the live stream, and all 1,000 people that get to see this on the review we get to call out Doug, the one and the only. I want to see what stock he traded this week and see how successful he was. Welcome to you, man, in all sincerity. I've got Sam Ike in the group here, who I've been conversing with in the pre-party, so pretty good stuff. I've got Zora Similahau. I hope I got that right. I do the best I can. That's awesome. It's great to see you. If you have your questions, please throw it in the group. It looks like we might have just a little bit smaller of a group just on a random Friday this evening. If it's going to be a smaller group, certainly we can converse with each other. I don't have a lot scripted this evening. I just really wanted to throw some themes out there to you guys about what I'm doing with the portfolio. I'd kind of like to know if the financial investor and Lydia both, so you guys put your drink down for a second. I might ask you to kind of chime in a little bit and tell me I'm off my rocker for taking some money off the table. Please do so. I'd like to understand what your guys' pulse is on this market. I'm not just completely convinced. Sorry, just been doing this a long time. And again, relative perspective. If you've got 10,000, great, let her ride. If you're looking at 100, 500,000 in this market, take a hard look. Take a hard look and ask those scary questions and convince yourself whether or not you want to stay the course or you want to take some off the table. Right now, if I had a sell button up on the whiteboard, I would have it active. Okay, now's the time where if you want to start to peel off the fat and start to pare back on some of those profit, now's the time to do it, guys. Remember when the volatility kicked up just 4 months ago, I told everybody on the channel, I said, don't do a thing. Don't do a thing, you'll regret it, okay? That was $40,000 ago. That was 4 short months ago in my portfolio. If I had panicked, and I had a lot of people come on the channel and tell me, Ryan, you're crazy, sell everything, you're a moron, sell everything, what are you doing, you're an idiot. I didn't do that. I don't do that. And we took a nice swing to the upside. But if you guys have any comments, man, to leave in the group, that'd be awesome. So I've got Jerry Welch. Anyone investing in mining stocks? What do you look at when deciding which metal to focus on? I've always stayed away from mining stocks. I think the cost to actually mine the ore is probably a lot heftier than trying to actually just own the metal itself or own a gold holding company like Iran Gold, right? I know that's a Jim Cramer pick, but I'll throw it out there because it's an interesting idea about owning gold, but not owning the physical gold in your house and having to take on the responsibility of safeguarding the precious metal. I've never owned a mining stock, nor am I really that interested in it. There's so many other good names out there. I basically sold the defense sector, except for Northrop Grumman, which I still do own. But I sold Lockheed Martin and I sold Raytheon because they had just run up and they were positioning sells. It wasn't because I don't agree with the companies or don't believe in the companies, but it was really one of those opportunities that I had to take profit and still stay invested in all my core positions and just let it ride. So I'm kind of a winner on both sides of the house. If they continue to run up, so be it. There's so many different stocks out there that you can succeed with, okay? And that's just what I did. But it's a great question. I'm sorry. I just don't touch it. So much good stuff out there. When I comb over the market, I see a lot of good companies out there, from the materials side of the house. I mean, healthcare is just riddled with good companies. I sold Novartis today. That ran up quite nicely. I took some profit in Pfizer. I kept 22 shares of Pfizer, but took a nice block off the table because I bought it at 40 when it dipped. So I took a position within a position. All right. Give you guys an idea of some of my insight on looking at that position power and putting that position within the position. When it did fall down, I reinvested in 40 or 50 shares of stock, right? It ran up a little bit. Boom, I take that position off the table and I keep the 22 and change, right? Continue that to pay me the dividends and roll those dividends back in the holding. But you guys certainly kind of give your ideas. You guys need to hit me up and tell me what you're thinking about the market, because that's kind of where I'm coming from. Next week will be a different week. But I just see things cooling off here, guys. I really do. I see things cooling off. We had the president come out, declare a national emergency. So kind of some unprecedented things going on. China talks are still ongoing. I think those are going to come out positively. If you want to know my honest opinion, I think this was long overdue, perhaps, and to get maybe, I hope for a better trade relationship with China. Not we do better and they do worse. I don't look at it that way. I just, I would like to see it beneficial for both countries, in my opinion. But, am I going to stay as invested as I was in the stock market while I sit on the side and kind of hope for the best with the trade relations? I just chose to opt for the defensive position while I can. And right now, with the market up today, I think it was 25.8, something like that. I've just never seen anything like it. So just to give you some kind of idea of where I'm coming from. So really good stuff. I do have my good friend Joseph in the group here. I got Christopher Blaine, who says 45. I'm not really sure what that is. If he's 45 or what the deal is. Grammarly Investing, Joseph throws that out there. Jerry Welch, anyone, the investing stocks. And, hey, Ryan, don't you say to buy and stay when buying in stocks? Why did you sell BlackRock? It's a good question. I mean, I could have kept it, but here's the thing. You guys are going to see me in a little bit different posture with the market in a condition of recession. Okay. Now, I remember 10 years ago, and a lot of you guys that have been investing for 2-3 years, you just see the stock market through your lens, okay? And a lot of reason why you can tune in, get my perspective on the market. Just like everybody's right or wrong, okay? I love BlackRock, the company, I really do. It ran up nicely. I took a 6% uptick in it, and on an annualized basis, I will take those profits all day. I owned the stock for 10 days. So on an annualized basis, to spread that out, that's phenomenal rate of return. And part of the reason why I did it is to take that off the table just from a positioning perspective. That's it. Kept my core positions rolling, took that profit and money off the table, pushed it to cash. But I'm managing a larger portfolio, okay? And I'm not going to get ultra aggressive on a stock market in this condition. Just not going to do it. No way. Is now a time to be 100% invested? I think there's a lot of new money coming into the stock market. Is now the time to be throwing tens of thousands of dollars at this stock market? I would say no. And it's all relative. If you were a new investor and you had 10,000 and you came to me and said, Ryan, I've got $10,000, what would you do with it? In this market, I would say invest 20% of it. 20. Really, what harm is it in investing, $2,000 into the market, buy 10 shares, whatever, 2,500, do 25% if you think Ryan is off his rocker, right? You want to put some money to work, some capital going on. You're not in a hurry. I've got the young couple in the group here, right? That you guys, the world is your oyster, for crying out loud. You don't need to be in a hurry. Remember what I said about starting my account with 1,500? I would rather see you start 2 accounts, one for each of you. If you're single, you come to me with 10 grand, start it with 20 or 25%, and monitor the market. Because here's the thing, I don't know how you're going to react if you just take that 10,000 and say, Ryan, my investing risk tolerance is an 8. I'm ready to go. And you throw that entire 10,000 in the stock market because of what you know through your lens of the stock market over the last 3 or 4 years. Guys, you've got a jaded perspective on the stock market over the last 3 or 4 years, okay? I'm not saying you're wrong. I'm saying it's jaded. There's a difference, okay? You have no way of acknowledging how bad it can get, okay? And I'm talking about bad from a relative perspective. If it adjusts back 20, 30, 40%, you're gonna feel that, okay? You're gonna feel it. And if it's your hard dollars that you're looking at, the lesson here is fundamental and it's psychological about defining your risk exposure to the market, right? That's why I drew this continuum up here. If you're a non-investor, you don't have skin in the game. You're a neutral investor. You're neutral, okay? You don't have skin in the game either which way, right? But if you do end up taking that $10,000, you can really put yourself over here into the risk category where that $10,000 may really accumulate. What if the market runs up another 20%, right? You've just made 2 grand, okay? The risk paid off. You made 20%, but that's not the optimal zone that we're looking to hit here. We're looking to hit the 7 to 10% year over year, right? Is now one of those conditions of the market where you want to seek that out? Sure, but it doesn't mean that you can't start with a token position going from neutral to something. The idea is that when you go from neutral to something, and I get it, okay? I'm not talking to folks out there who are tuning into the Independent Investor channel and they're like, I want to be an entrepreneur. I want to be an entrepreneur and invest my money so I can never work again. I don't think that those are the people. My job is to know my audience a little bit. And I think the majority of the people coming to the channel are like, I freaking work hard. First of all, I don't want to give my money away to a financial planner, but my understanding is that that was the only option that I've ever been told that I have. I'm here to tell you that's not true. That's not true. The other option that you have is to invest passively, go for this optimal window right here, drastically reduce the fees within the investment account, and you're off and rolling, right? But people just don't understand that exists. But I'm talking to hardworking people. And that was part of the title of the video that I came out with when I wanted to really touch on this topic where, people come on and I feel like, and I'm entitled to my opinion, that people who have a regular job get kind of bashed on a little bit. And I don't know, man. I don't envy you guys out there that are in your 18 to 24 range right there, to where you've got all this inundation coming in and all you hear is you can be an entrepreneur and have money floating out your ears all the time. Money's hard to make, okay? Going right after soft money, and I'm talking about passive income, I'm talking about soft money made from the internet, through all the opportunities, and the opportunities are out there. They really, really are. But there is absolute value in other aspects of life. I've got teachers in the group. I've got college professors in the group. I've got folks that are into academia. They could really care less about, how much money or how fat their wallet is, because it's going to hurt them when they sit down, right? They're into, self-enlightenment, right? Educating themselves. I've got some folks that are absolutely brilliant in the Facebook group, heck of a lot smarter than me. It's just awesome. It's an honor to be in the group, and I think I'm the one that invented the group. I mean, you wouldn't know it to kick in there. I think it's Ernest's group right now, but I just support everything he has to say. Also, Raymond Lee, those two got into a back and forth, and I had to read it 6 times to understand what they were saying. It was awesome. If you don't know what I'm talking about, kick over there and check that conversation out. It was pretty rocking. And that's the type of, I like that stuff, man. That's really, really cool. They're trying to get down to the nitty gritty. I think for your guys' benefit, I think you guys will really benefit from that. But, that's just my philosophy and perspective. I know where you're coming from, and I understand. Call me out, keep me honest. But you guys have to remember, a lot of the portfolio is passive. A lot of those positions that I took were short positions to spread me out a little bit, and I won. Okay, so I ring the register and I'm on to the next day. Okay, now look at me now. I'm in a position to enter into next week. If the market still continues to run up, now I've got this taxable account. I've got the first trade account working for me. I've got the employee sponsored that's still working for me. I've got one of the military guys in the group here as well. Hit his question up before the deal. But I want to have these smaller accounts growing right now while the market is in this condition, because if it does end up taking a nice haircut back, I'll be in a position to go to work. Okay, and that'll be the time when I really actually do go to work. I mean, that's where the money's made, guys. It's made in the trenches. Okay, and I'm not saying you guys that have those starter positions, maybe you've joined the channel over the last year and you've started these positions 5, 6, 10, 15, 20 grand. You guys are good. You're good. You're invested in the best assets, the best account, low to no fees, tax protected. Some of my older folks in the group, man, they've got other monies coming in from other places. They're looking to expand their portfolio base. They're good too, but for me, taking a little money off the table right here, that's what seemed prudent today. That's what I did. Says, thanks for answering my question. You're very welcome. I don't know if I get down to the bottom here, a ton of these guys, like the financial investor says, good day. I've got Travick Stewart says, what's up, guys, man? Or Travick Stewart. I hope I'm saying your name right, man. But just a staunch supporter of the group and the channel, man. It's just freaking awesome, man. Freaking awesome to meet. I would never, ever have met this many people from this many places. I don't know where, I don't know where 1% of the community comes from of the Independent Investor channel. But I'm really humbled. I'm honored to have so many people from around the world. Lots of folks, of course, from the United States. That's where we're based. Throwing down for people, letting them know what kind of opportunity they have here, because I've got a lot of people who hit me up, and I think it was M1 that's not available to some of those folks in some of those other countries, and they're just like, dang, wow, that's crazy good. And those cats are smart. They know what's up. They know what kind of opportunity you can make in an account like that doesn't pay you such a high, or doesn't take such a high brokerage fee. Cost of ownership is close to none. It's a big deal, and just I'm proud, man. I'm loving providing that option for you guys, or that solution. And I think a lot of you guys, at least I'm looking at the statistics, and a lot of folks are making their way into those two platforms, and it's really exciting, man. I'm excited for you guys. I'm a little envious because I wish that would have been around. And I know I've got some of my good friends in here. I know Joseph would agree with me for sure. I mean, if he would have had those opportunities back when we started investing, man, we're old school, so you new school guys come in here, guys and gals come in here and get some old school perspective from us. And just to tell you, those solutions didn't exist back in the day, and you guys, you got it right in front of you. It's really exciting. I'm excited for you guys. You'll be 10 times the investor that I ever could be or really by not changing a thing other than the fact that you're leveraging the products that are available now to you guys. It's a big, big deal. It's really cool. So Greg is in the group here. Awesome. Guys, make sure you throw your questions in here. Driving home. We'll be home soon. Stop by Trader Joe's. Brent says Trader Joe's. That's funny. Some of these West Coast places that I've forgot for a while. I haven't seen a Trader Joe for a long time. That's pretty funny. Euphoria is right. So I don't know if you're agreeing with me, Bob. I don't know if Euphoria is right as far as deeming this market. I'm not going to sit around and find out. Not with the amount of money. I work way too hard for my money, guys. I work equally as hard looking at the portfolio and trying to do the right thing. Do I do the right thing all the time? No. And this funny thing, Scribner mentioned it tonight on his video. He's like, I'm not a perfect investor, I'm not required to be a perfect investor. And that was really, really a smart comment, because if you think you're going to get into the stock market and just kill it, unless you're the one and only Doug Whitaker, all right? If you think you're going to whip the stock market, it's going to humble you, okay? And I just would remind you to reassess and make sure you're not too far out here on the risk pendulum. I'm not going to name names, but there are certain YouTubers out there that are absolutely somewhere out here in my wall on the risk scale. And I don't wish them any ill will. I wish I could talk to them. I wish they'd come on and watch the Independent Investor channel, but we're such a small channel at 12,000. I'm not supposed to be able to give my opinion because we're so small and I don't know what I'm talking about. So hopefully I'll be eligible once I get up to the 100 or 200,000 subscriber range to be smart enough to talk to some of these geniuses about their portfolios, because I'd warn them a little bit. Geez Louise, if I was rolling around in that type of cash, I'm a builder, right? So my advice would be quite simply to start some small token positions in the young portfolios. These cats are young, right? So start some token positions in some ETFs, some dividend payers, buy the growth. That's fine. But what are you doing having your entire portfolio in all growth? It doesn't make any sense to me. I disagree with it. I could be wrong. That portfolio could run up and make 100, 200, 300% over the next few years. And then who's eating crow? Me. But I still won't change my opinion about it being somewhat irresponsible, in that I don't even know what level of risk that portfolio is subjected to. And I think some of these owners of these portfolios aren't capable of looking inward and doing a self-assessment. And that's the one thing that I kind of promote for you guys, is to always reassess. The stock market is very, very powerful, okay? But it comes down to not getting too close. I've come out with videos on this. One of the coolest videos I've come out with is, not allowing yourself to get too close to the fire. Always keeping that safe distance where you're keeping warm, but you're not burning yourself, all right? It's not worth it. The last thing I ever want to see is any subscriber, down to the last subscriber, get hurt or misconstrue or get overexposed to the stock market and really take a haircut. Investing does involve risk. You guys know that, but you gotta be diplomatic with your approach. All right, make your approach fit what it is that you have in your own program. So we've been going about 43 minutes, guys. If I don't get a ton of questions, with your guys' permission, I will probably cut this to about an hour, perhaps maybe this time around. I did offer the release today. I've got so many topics jammed up right now. You guys have no idea. No idea. And I did film that video that I had with my wife. Was about 25 minutes. It was really an awesome video, and she told me, no, don't put it on. But it's really cool. We go through all of kind of our budget, talking about how we met, started with nothing, have built everything from the ground up. It was really, really cool. And you could kind of see, instead of just hearing my perspective, you could kind of see in between us the perspective from both of us. So I don't know if it would go over well. She's very shy, she would not like thumbs down at all. But I don't know if I'm going to release that, but I do have a ton of different topics to cover for you guys. That why video that came out today was just part of a series that I'm going to come out with. I'm going to roll them all out. Why, where, when, why, how, and what, and then I'm going to do it all, because there's answers to those questions. And I think beginning investors can really benefit from that. So really good stuff. Yeah, I don't know. I hope you're wrong. I hope I'm wrong as well with euphoria. To be specific with you, Bob, I'm not. I know euphoria is kind of a blanket statement. You know what has me worried right now? And if you guys have stuck with me for 45 minutes, this is kind of why you stick with the Independent Investor channel, because once I get kind of warmed up, I'll give you some insights on what I'm really concerned with right now. And I don't want to scare anybody, but $22 trillion is scary. Okay? So that's the number one concern I have right now. And it's almost as if our lawmakers can't figure it out. Okay? $1 trillion is going to go to interest payments every single year to service the debt. So for you home gamers out there that have stuck with me here, you guys know what that means. That trillion with a T goes into a vacuum. Okay, it's gone. And I would love to see some level of potential for some fiscal responsibility. We have 2 years left under the current president's tenure. Say what you will about this current president. Again, I don't get into politics on the Independent Investor channel, but the landscape is going to radically change if he is voted out and one of the new Democratic contenders step into office. It's just going to change, whether it be for the better or for the worst. I'll let y'all fight that out. That's fine. Again, I'm not trying to stoke an argument. What I'm saying is, from an investor's perspective, there's a lot of things going on right now with interest rates going up. That does not help a $22 trillion debt. Okay, it doesn't. And we've watched this country for really over the last 10 years incrementally increase the debt. And it's wartime is tough. That's really when the debt typically swells. But what are we doing to remedy it? And if somebody has some insight here, I know Joseph is in the group here and he studies this topic. I'm concerned. And I guarantee I'm not the only one. I'm not. It's concerning. I've got Joseph's one of the think tanks in the group, but I've got a couple other folks as well. And I'm not sure if he catches the live stream after. But a lot of folks study this theory, and I don't know how it's going to end as far as whether or not we turn it around and find some fiscal debt reduction initiatives. I mean, these folks can't get anything done right now, okay? How are we going to expect this to get done? That's a rhetorical question. I'll throw it out there to the group, and it's aimed at provoking thought, okay? That's just the way of it. All right. So good stuff, man. Really, really appreciate y'all's time here. I just bought some Vanguard sector ETFs, tech, financials, and healthcare. So those are the three top dogs as far as I'm concerned. I really like those sector ETFs. I really do. I think they're awesome. Just a great way to get a little bit more aggressive on a sector, own the entire sector without just buying Pfizer. Okay, you own Pfizer through the ETF. You own Novartis, Merck, J&J, AbbVie, etc. All the good healthcare companies that are in there, Medtronic, and you don't subject yourself to the single stock risk. I think it's really, really cool. I'm very satisfied with those. And you know what else is interesting about those is you look at the year-over-year performance. Those are all pretty close to 10%. Pretty impressive. So really awesome. I took a reduction in my healthcare sector, Spider ETF. I took a reduction in the staples. I took those positions down to around 10 shares a piece. So I'm going to build off of that base. The sector spider ETF for healthcare, I had like maybe $5,700 in that position. It really performed well, and that was just one of many positions. Guys, I don't get on here to brag, but I'm going to tell you when I'm down, and I'm also going to tell you when I'm up. I had a big week this week. It was nice. It was good. It was very big. Whatever. I do have humility, but I took that off the table, and we're gonna live to fight another day here on the Independent Investor Channel. That's what we're working for. It's just my perspective on it. So K97 says, will we see your M1 portfolio soon? I can do that. I just told you what it was. No gimmicks. The $1,500 is going right into the ultra aggressive portfolio. So if you guys have M1, you can go on there and take a look at it. Brent is going to know exactly what I'm talking about. I was serious about that. I think for a lot of investors that don't want to pay for the rebalancing, right? You guys remember the Betterment debacle on the Independent Investor Channel. Holy crap, that was fun. Wasn't it fun? No, it wasn't fun. Anyway, M1 offers that rebalancing for free. If you just throw your money into a model portfolio, the one that I got with the ultra aggressive had 8 Vanguard ETFs. That's it. That's all the products we talk about. BND was one of them. VTI was one of them. VOO, emerging markets was one of them. I think there might have been 1 or 2 sector spider ETFs in there. And the biggest one was developed nations. I think it was not VPU. I'm drawing a blank on the ticker symbol. I do apologize. But if you guys kick into M1 and look at their model portfolios, you can all do that. Certainly use the affiliate link, for crying out loud. It's good for 3 months or 30 days. I don't even know. Don't really care, to be honest with you. I don't recommend M1 for you guys because I think it's a bad product. I think it's a really good product. I just want you to use it for what it's intended for. And I actually think this is what it's intended for. Now, down the line, I'm probably going to be utilizing M1 for the partial shares to accumulate shares of some of the bigger stock, Booking Holding, Amazon, Google, some of the bigger names out there. I can look at accumulating some partial shares in those in M1 and taking advantage of that. But for right now, I'm not. So you guys can look at that aggressive portfolio. I'm sure that you could probably Google it, and that portfolio pie will come up, and you'll see that it's broken down quite nicely. So if there's somebody out there that's looking to invest in the market and doesn't have a lot of money, looking for a passive solution, if you're going to go with the Roth, self-directed Roth IRA through M1, I do believe they've got a minimum of $500 to start that. I've said that a couple times, but I want you guys to understand the 500 minimum will be that to start it. Well worth it if it's your first account. You guys, if you're working or you're saving and doing what you need to do to get up to that first 500, that'll be one of those monumental times in your investing career that you actually remember. Is that time when you made your first investment. That's the most memorable for me. The next most memorable is when I turned over $10,000 in the account. I was like, holy crap, this is real. This is awesome. To be quite honest with you, when the accounts got up to 50, 60, 70, and here they're approaching 100, less monumental as far as I'm concerned, because those initial goals, when you get to them, when you start investing, you don't think they're ever possible. And I'm here to tell you that they are. They are for each and every investor that's coming in, listening to this powerful message. And that's kind of the difference in delivery of the Independent Investor Channel, man. I want each and every person to maximize those benefits through the solutions and through the products that we aren't offering. We're just discussing. I didn't invent these products. They just exist. That's why I talk all the time. Anytime I ever end up talking to somebody about investing and we get up rapping about a discussion, I always have them open up that ETF page off of Vanguard. There's so much information off there. It's not even funny. It's amazing how much information is on that with regard to your fixed equities exposure, which is one of the videos I'm going to roll out to you guys. And then your large cap ETFs, mid cap ETFs, small cap ETFs, emerging markets, and then your, your sector spider ETFs at the bottom. So really a lot of good information, and I would really encourage each and every one of you guys to become familiar with that. Click into those ETFs, learn yourself up a little bit, justify for yourself why we're looking at Vanguard and the low cost to entry. I highly doubt that a financial planner, if you go talk to them, is going to sit there and recommend you go into 7 or 8 ETFs to build the portfolio. Ain't going to happen. It's going to be 3 or 4 mutual funds. If you went in there with $4,000, they'd take you and put $1,000 into each mutual fund. That's what they do. Why? Because it's better for them. That's why. That's why. I know there's going to be financial people who make their way to the channel and hear me make that comment, but I'm freaking sorry. Actually, I'm not, because there's a lot of truth to that. There really is. There's no way you can tell me that if your job is to go in there and sell people on proprietary mutual funds that are proprietary through the brokerage, that you're not going to do that, that you're going to sit back and just have the client's best interest in mind. No way. That's not how the world works. Anybody who's been around the block a few times understands that you might as well just cut that piece out of it and take your chances on your own with a product like M1. The model portfolio adjusts over time. It allocates your money. You can dollar cost average to it, and it's good. You can move on with your life. You can do whatever it is that you want to do because you're going to be an investor. And when people ask you, well, what do you do for investing? Oh, I do M1. They're going to be like, what in the heck is that? Another video I'm coming out with is, are people nuts for listening to YouTube advice? And you guys are going to be really, really encouraged by my answer. I think you are. I think you're absolutely nuts to listen to most advice over YouTube. I really do, because here's the thing. I think a lot of people are listening and blindly deploying. That's what I think, okay? That's why I try very, very hard to build my message around, if it's a move that I'm making, I make it not usable for you, okay? But when there is something that is usable for you, I premise that comment with something to say, look, if you want to get invested and you've got $500 and you want to invest passively in the market with low to no cost to entry, tax protected and wealth preserved, M1 Finance will get you done, right? If you want a stock account option, that's your active. That's where you bring first trade into the account, right? It's not one of those things to where you can look at and say, wow, Ryan's invested in first trade, I'm just going to go blindly invest in it myself. No, the idea is that you're looking for an active solution, and then you open that account and you're going to be on your own, because I'm not going to build the portfolio for you. What I'm going to do is be transparent about how I've built my portfolio, right? And that kind of helps you guys get started, because I don't want to leave you in the dust. I don't want to do that at all. I want to give you some ideas. But it's amazing to me how smart and savvy a lot of the community that come into the Independent Investor channel. I know there's, geez Louise, for every one person that we get to, there's probably tens of thousands of people out there that will never even understand that you can trade stock for free, that you can invest with so little to no cost of entry, the options out there. There's people that I talk to all the time, they don't even know what self-directed investing is, let alone the solutions of an M1 or a first trade or a Webull, if that's your thing, right? A lot of people just don't understand that those options exist. And so you're part of something special. You really are. These things are very real. They're very, very tangible. I use both of them. They're really good. Yeah, just providing those solutions to the group is very, very important. We're going on about an hour now. Guys, I'm going to get to the end of this. If you guys don't have any further questions for me, honestly, if you've made your way into the group or you're in it right now and you haven't taken the slight opportunity to hit the thumbs up button. Evidently, it helps the channel here on YouTube, helps us grow. It helps us. Go ahead. Now I'm letting you do it slow. I wish there was a thumbs down button so I could actually see when people are pushing it. That'd be kind of fun. So, nah, just kidding. Thanks for the support. I see it's going up now, man. Really appreciate you guys kicking in here. But I'm not going to prolong the live stream that there's not a ton of people in here making their way. I think a lot of people that review this after the fact will find a lot of value in my dialogue about what I've done to reduce some exposure this week. That's just what I did, okay? Strong moves in the stock market work. And I think you could make strong moves in the stock market if you were looking to invest next week, okay? But don't be wavering, okay? Don't be wavering in your plan. Don't be scared. Don't get overexposed. Don't invest if you feel uncomfortable doing so, all right? I can keep going and going and going about a lot of the mistakes that I see people make, all right? Make it make sense for you, okay? That is the strategy and the key, all right? I had that young couple that I had this week. They were so awesome. They were so awesome. They were making good money, okay? And I don't want to give away too much to protect anonymity, okay? But here's the thing. I will speak in generalities because it's worth it. And there's a lot of really good lessons that came out of that discussion about money and options. And they were so cool because they knew exactly what they wanted and they knew exactly what they freaking didn't want. And that was really, really encouraging to me to be like, wow, this is what they feel comfortable with. That's it. They didn't want to be stuck holding the bag on a stock pick that ends up taking a 50% haircut. No way. So what's the solution to it? Well, the solution is sector spider ETFs, right? Or total market ETFs. And that's exactly what they did. They looked at the Vanguard website. They went shopping. They had money that they wanted to expose to the market. They already had cash aside, good to go. Built a portfolio, off to the races, good to go. That's how it's done. It's not that difficult. Anybody can do it, especially that option. Honestly, that option right there, anybody can do that. When you start to get into stock investing, that typically takes a lot more research on your own, a lot more of a tolerance to risk, and an understanding that the swings of single stock are going to be there, okay? You can invest perfectly, and you're just going to be stuck holding the bag at some point. That just comes with the territory, and I really wouldn't be a friend of the channel if I wasn't providing that transparency to you guys. And that's kind of what I'm trying to do here. Who knows? The market may end up going up another 50% from here. I don't know. I don't see it. I just don't see it. I look at the upside potential being limited. One thing, and I don't know if anybody in the group here has looked at the charts on the S&P 500. It'd be interesting. I'm going to actually look at it this weekend. I didn't look at it in preparation of this live stream, but I certainly want to look at it and make sure that we haven't broken through resistance today on the downtrend that we've had going on really since October, okay? You see it in some of these stock prices. These stock prices are kind of hovering between 52-week ranges. So I'd really like to see the resistance lines for the S&P 500 from a technical perspective, because I really think it's going to be a lot. It's going to take a huge catalyst, and I really don't know if the market is pricing in the China deal right now. We'll see. We really will. The market is a forward indicating tool, and it may very well be pricing in a China deal right now, and we're not preparing for it. So just my thoughts on the general stock market. That's why we come in here, kick around. I'm allowed to be wrong, all right? Not very often, okay? But no, I think the takeaway really is it's okay to be wrong, but I'm trying to stoke a discussion about where we really are. And I was willing to put my money where my mouth was today and kind of push some money to the side, kept some core positions, put some money to the side. So all the wiser for it. That's just where we are. So we'll see what happens. Ryan, do you like J&J here? Oh boy, so much negative publicity on J&J. It's really poor. Novartis was the position. My core position is Johnson and Johnson. I'm long Medtronic as well. I've held Medtronic here. Pfizer has been a good position for me. J&J's run up. It had the talcum powder scare. I know Lydia's really down on it. Her opinion about it is legit. It's legit, and she's not the only one. It's just, it's a core position that I've held for a long time. It's a wonderful company. Would I buy it here? Carefully. If that's what you want, you could buy some J&J here to look at it. Just be careful. If not, remember, there's been a really good offering in the group here to look at the healthcare ETF through Vanguard. That way you if you want some healthcare exposure, which you should be looking at about 15% of the portfolio with some healthcare exposure to it, why not take a little bit of bite of the healthcare ETF from Vanguard? Just look at it. Doesn't hurt you to look. But J&J was one of those positions that I didn't touch, and I typically don't touch that. I allow that to dividend reinvest, work for me. I picked up more when it tumbled. Now it's back and running up quite nicely, so that's just where we are with J&J. Christopher Blaine says thug life. I doubt it, but okay, maybe. I don't know. Perhaps there's some thug life. That sounds really weird coming from me, man. It really does. So I've got D. Sorrell. I can't wait for CVS to report next week to see how the merger is coming along with Aetna. And yeah, that's CVS has a buy right here for sure. If CVS fits in the portfolio, really I always forget their healthcare. They're really good. One of the stocks I sold today because it had run up quite nicely. I had a very small position. 10 shares, I think, in CVS, very small, maybe 20 shares of CVS is what I had. But valuation's good on CVS. I like it. Good dividend as well. So yeah, CVS is a really nice play right here. I've got Greg, great team, no doubt. I don't, it's one of the frustrations about coming back to the title of the video. I was angry when I wrote it. I wasn't angry. I was just kind of disappointed, because the time value of money comment came out, and I said, okay, well, the time value of money, if somebody works for 40 years and they're able to accumulate $1 million in their life, the value of the money is better for somebody who makes that first $1 million in the first year, right? And I think that's a shallow perspective. I really do, man. I don't tag value on people in that manner. If I ever have means in my life, I'll always have the same humility that I have now. Okay. And to be quite honest with you, and I told you guys this in the Facebook group, I feel like I'm successful now. I felt like I was successful 20 years ago. So I don't really see that whole thing changing. And then the other comment was about people who seemingly don't have means or work for a living somehow have all these opinions about success and wealth building strategies when they aren't really wealthy. So therefore, they just have opinions and that's it. And they should keep their opinions to themselves. I found that really shallow as well. And it's interesting you say that. I just think teamwork is a beautiful thing. I don't ever envision people who stand up in front of an auditorium and Vanderchuck or whatever and all those other guys. I feel the same way. Honestly, Tony Robbins is one that sticks out to me because what he does live is really interesting with people. But it's psychological, and not a lot of people can do that. It's very, very unique. Okay. But I always kind of cringe a little bit when there's one person up in front of 5,000 people who have paid $5,000 to see those speakers all clapping, in unison and yay, and it's like you leave the conference and nothing comes of it, because they're telling you have to be a master salesmen just like they did, well, those sales aren't going to be, repeated. All they're doing is taking that process that's worked for them and scaling it and selling it to people, 5,000, 10,000 people who want to come in and pay for that, because people want to aspire to that success. They really do. And in all fairness, a lot of people don't really want to go through what it is that those people, Dan Locke included, that guy worked hard for what he had. He worked very, very hard. But leave it at that, don't look at it like it gives you the opportunity to judge people, give people an opportunity to define value in many, many different ways in life. It's not just about finances. This is all we talk about on the Independent Investor channel, but honestly, man, finances can be made in a lot of different ways. And this whole notion about YouTube being the center of entrepreneurship, you're working for the man just like everybody else, okay? YouTube is paying you, all right? True entrepreneurship is generating something from nothing, finding a need for that something, and then selling it to someone. That's entrepreneurship in a nutshell. If you're a YouTuber, you're not an entrepreneur. Sorry to tell you, sorry to break the news, but again, I try to kind of offer my voice of reason, right, wrong, or indifferent. Take it for what it is. That's just my opinion. And some of it really frustrates me. When some people, I mentioned the portfolio reviews on YouTube, okay, is a manufactured portfolio that's somebody's taking YouTube earnings and just forking them into a big, really aggressive portfolio, something that you need to be aspiring to. Well, I don't know. I mean, they're huge, so they control the discussion, and it's a big portfolio. So a lot of people look at it and they get really wide-eyed and they're like, wow, I want that too. All right. But you really need to question how it is that got built, how fast it got built. Is there really growth there? Is there really value there? Where is the value? What's the motives behind the scenes, on observing some of that stuff? So again, just kind of one of those opportunities to be kind of careful about what you're seeing there. And in closing, I will say this. I will say, just because you invest in the stock market doesn't make you an investor, okay? Doesn't make you an investor. It can potentially make you a trader, but true investing is the opportunity to take something very little and grow it into something very special. And that's what we're looking to do here on the Independent Investor channel, is to take those hard dollars again and transition them down the line to hard dollars, okay, or soft dollars. Just taking hard dollars and putting them into a portfolio and saying, I'm an investor now, doesn't really work that way, guys, okay? So just kind of my thoughts, and just in line with the topic of this video, the theme about just kind of staying constructive on the content that's offered, keeping it in perspective. And I'm not exempt from that. I'm not. The whole YouTube advice, this is going to be a fun video I'm going to throw down. But I've got some really interesting ideas, because it was sprung from a comment that I had through the community about friends talking, and the friend was telling the other friend that they were tuning into YouTube and watching some financial videos through YouTube, and they were like, what? You crazy, you're nuts if you follow that advice, And there's some truth to that. There really is. So let me cruise down here and get some of this. Great team, I agree. Victor Hernandez, hey Ryan, have you checked out Jimmy at Learn to Invest? Good info also. I don't know if you mean Jimmy Jazz or Jimmy. I'm not really sure who you're referring to there. But no, I got to be honest with you guys. I don't really check out a lot of other content. I don't. I should. I understand it's something that I should do to grow the channel. Big whoop-de-doo. I don't really care. If you guys want to share the message, that's where I put value. If you don't, then I don't want you to share it. I don't. If you don't believe in the message that we're throwing down, some of these niche solutions that we're talking about, which they are legit, they're real, they work, they can work for anybody. But if you don't resonate with the message, then I don't want you to share it. Okay. And I'm not going to go whore myself out on every other channel out there just because I know it helps. And it does. It helps. That's what I'm supposed to do. I'm supposed to go on every single other channel out there and put my name. To be quite honest with you, if I had more time, maybe I would do it. I don't have the time. I do not have the time to do that. I do try to check that out. And thanks for leaving it in the group. But I got to tell you, most of the content that I would see online irritates me. So I don't watch it. I don't get myself all spun up. That's why I have my own channel, so I can offer my twist, my voice of reason to folks, and I can tailor the conversation in a way that's aimed at freaking help people. That's it. That's it. I've had a ton of people come back to me and validate and say, thanks, Ryan, you really did help me. And that's where it's worthwhile to me. And I didn't have to make $1 million to do it, but there's value there, man. Sorry. There is value. And it's a lot deeper when you look over and you reflect on your life and who you've changed or who you've impacted in a positive manner. I could never, ever do this without the conduit of YouTube. And that's the one pure part of it that I really do like, is that if I'm approaching the message with some integrity and some merit, then the sky's the limit. And I do believe that. We'll grow the channel as slow or as fast as you guys want to grow it. It's that simple. You're not going to see me change. I'm not going to change a bit, because I do buy into that teamwork comment. I really do. I think we're going to be powerful in numbers. And sooner or later, people are going to have to take note and be like, dang, this is crazy. Okay, stop. There's this YouTube community that started really small, and it started small, and we thought they were going to remain really small, but they have grown now, and they are a powerhouse, and they are channeling a lot of money to individual investors, individual families, individual households, individual working class, individual middle class, right? You could slowly have the power to reduce the income gap, guys. And the income gap right now is getting worse, not better. Okay. If you want to know a macroeconomic goal of mine of this channel, it would be to put every single dollar that we could put into individuals, households, financial well-being, then we're winning the battle. We really are. And is it a battle worth fighting to win the war? It definitely is. It definitely is. There's a lot of people who are doing just that, man. Really good stuff. Christopher Blaine says investing should be a family affair. It is. It really is. We talk about our finances being together. The decisions, I don't know if you caught that when I said the decisions are 50-50. Everything I do in my portfolio, I do for hers as well. We have a lot of rules that when we go on vacation, we go on vacation, and we don't. We always go together. We never leave the kids. Well, we've drugged the kids all over the place, but a lot of fun. To each his own, for certain. Whatever rules make sense for you guys, I guess. A lot of the fun thing is we don't abide by rules. We don't. She's a grown adult and she can do what she wants to do. There are no rules, but we did talk about spending habits, some really fun things about how we utilize online banking to our advantage, how we utilize a credit card, what some of our spending habits are, which are really, really interesting to the normal person, honestly. Have you ever went to the mall and just walked around? We do it. We do it all the time. We just go and walk. And I'm looking around like, who buys this crap? Seriously. It's baffling to me. I typically walk around the mall like this. Like, I don't understand a store like Nordstrom. I don't understand it. Like, every sweater in there is $400 or $500. I don't get it. Okay. I just don't get it. So yeah, to talk about some of the spending habits is kind of cool. I'm still hinging on whether or not I release the video or not. But we'll see. We'll see. I don't know if it would be received on the channel well. I hope that it would. The intent of the message was really to show that middle ground. So thank you for that comment, Christopher. I appreciate it. Let me cruise down here. You checked out investing should be a family good. Good, man. I got some people in here that said hi. That's really cool. I'll let her know. That'll make her feel good so she's not so shy and she can prepare herself for taking over the Independent Investor channel when I turn over the helm. She's I1. Yeah, I'm I2. That's the way that works. Good stuff. Let me cruise on down to the bottom. How do you value a stock? Interesting. There's a lot of things I look at when I comb over the market. A lot. I pay attention to everything. Analyst reports, I do look at. Okay, I'm not one of those guys that discredit analysts. Okay, I'm not one of those guys that invest exclusively on analysts. I'm typically looking at where a stock is in a 52-week range. I'm interested in that. I'm interested in the price to earnings. I'm interested in the price to earnings compared to the growth, which is the most important metric that I look at. The two, for example, that I looked at that were the best value were Prudential, number one, and Bank of America, number two. Those were the two stocks on a valuation perspective. If you put it that way, wonderful. But I look at stock charts. I look at where it is in relation to its range, okay? Because if you guys get a sense for my flavor, I do like to channel stocks. Like, just because I've sold these stocks today doesn't mean that I won't enter back into positions if the market goes down 10% over the next month, okay? Doesn't mean that I'm never going to invest in Raytheon again, ever. Raytheon's a phenomenal company. Still is, always has been, always will be. Same with Lockheed Martin, same thing, right? But a lot of different things. I've been using FinCiv. That's a really good website. I hope I'm saying it right. It's kind of weird, but I do like it. New York Stock Exchange has all of the financials. So if you go onto the New York Stock Exchange, it's not rocket science. I don't have to charge you for a stock market mastery course to give you all this information that's free of charge. It's freaking free, okay? You can go on and get it yourself. But I will tell you that the number one source for my information comes from my brokerage account. I will tell you Merrill Edge has some cutting edge research tools, whether it be on, you can filter stocks. Their stock filter settings are really, really interesting, where you can look at a batch of stocks with price to earnings ratio, price to earnings to growth less than 1. And you can just filter everything out of the entire stock market and only look at price to earnings to growth under 1, a multiple of under 1. Lots of different things. You can look at growth stocks. You can look at stocks at a 52-week low. You can look at the Bank of America highly recommended list. It's the top USA list, I believe, is what they've got. Just really interesting stuff. Guys, don't think that stock analysis has to be something that you do to find a needle in a haystack. It's not like that. I don't understand why people think like that. Like you have to be the one person that can absolutely find that one stock that the other 2,000 analysts aren't looking at. You know, it's get over yourself. Don't be so arrogant to think that you're not going to comb over the market and you're going to look at a company like Prudential. You may look at a Prudential and it's at the lower end of the range. It's trading at 5 times forward earnings. It's amazing. Prudential's a really good value right here if you're looking for an insurance company. I had that question in the top of the group, but MetLife and Prudential were the two value plays that I found, and I found it through that valuation. Alibaba scored out really well when I bought it. It's run up quite good. Baidu scored out pretty well from price to earnings to growth, those types of things. But I think the key to my stock evaluation is I'm not afraid to get into a session. Just to give you an idea, the writings that I went through a 5-hour bender to pick the stocks out last week when I did it. And this just kind of give you kind of an idea of what goes on in my brain. Okay, that's how I do it. So I'll give the ticker symbol, and you can see here in parentheses, that's a perspective of the number of shares that I'm looking at. And then I'll multiply that by the number of shares and kind of adjust the money to how much of the, and I've got pages of this. This is all the brokerage account. That's the first trade account right? That's where the rubber meets the road for a stock investor. Okay, so don't think that you're going to take it from your mind to the account right away. Don't be afraid to go old school and just pull out your handy dandy notepad. I think I'll show you guys the brokerage account. Oh, that's mine right there. That's a different page. That's a stock pick list right there. PayPal, Checkpoint, IBM, KLAC, Emerson Energy, Emerson Electric, Stars Constellation, Philip Morris. I'm reading the tickers backwards. There you see the BlackRock. There you see Prudential. Give you some insight on kind of what, that's a really cool question. It got me into kind of showing this, just another kind of a scratch of just some notes that I take. You know, I have a lot of fun with it. It's really a lot of fun for me, and that's part of the key. I'm not going to sit here and tell you that there's a certain stock pattern that I look at. That's silly. I don't need a stock pattern to know that buying Home Depot is a good deal. I'll look at it in its 52-week range, and if I want to take a position in Home Depot, market may be down a little bit, perhaps the stock is down a little bit, then I'll take a crack at it. If it goes down, it's still Home Depot. All right. The smartest comment that I received from Tony Robbins last year when I started following him, he talked about the stock market really being kind of equally valued at any one given time. So don't really try to find that needle in a haystack. Don't try to do that. All right. If you want to invest, great. But the reason why I do this comb over of the stock market is to try to find that opportunity in those stocks that have kind of got beaten up a little bit, that are still really, really good value, really good value. You guys are going to understand in the first trade account, I didn't do any trading in the first trade account. I've taken those positions and I'm going to build upon them. It's a smaller portfolio. It's built with about $2,700 right now. There's some cool names in there, some cool stuff, some smaller oil companies, some smaller cap to mid cap names, some regional banks in there, some foreign telecom I talked to you guys about, some cool stuff. So I'll be rolling that out, providing that through transparency. So good stuff. Good question, Fulfill. Joseph, thank you. I hope you enjoyed my answer. It's a big answer to a very, very big question, but I think it gets misconstrued all the time. I think people overthink and underthink this very question. So any recent or upcoming IPOs you have your eyes on? No, I don't. The IPOs that I'm aware of, at least aware, and I don't know if they're actually going to make it. Uber, obviously the big one, and I don't want to misspeak because I don't know if they got pulled from the agenda. I haven't been paying much attention to the market. I've been very, very busy, and I thought Airbnb was another one that was coming out, and then a couple other ones that were trying to become eligible. But I'm not a big IPO investor either. I've been burned a couple times. I mean, I wish I would have bought Google. I wish I would have bought Facebook when it came out, but I didn't, of course, you know. So nah, I don't, and I don't follow that. If you guys want to drop the IPO list in the Facebook group, that's where that stuff goes so people can be aware. I think it's cool. I'd like to know when Uber comes out. I won't be investing in it. And I don't know if I would say that it's appropriate for you guys. I mean, geez, why? Don't invest on hype, please. You'll typically get in trouble doing that. And that's why I'm concerned with a lot of this MJ craze going on right now. The Monk Way came out with a video, said he invested $50,000 into Canopy Growth. That's awesome. That's awesome that they've got that money to throw around. I think that's foolish. That's just my opinion. All right. Travik says, very inspiring, Ryan. I helped my wife open an M1 account, and she's getting used to the idea. I had to convince her, though. Told her about you and your message. Hey, cool. That's really that's all the payment I need right there, man. That's really cool. You guys are going to find that as time goes on, you're going to validate it. It's you. All right. That's awesome. I appreciate you saying thanks to me. this stuff is not rocket science. I didn't invent it. I just brought you to the idea, right? And if we brought you to the account, the bucket, and we maybe helped you a little bit with the solutions, that's awesome, but it's yours. It's yours. And that's what I'm talking about with empowering, because the key to the message isn't that you invested in the stock market because you found it through YouTube, okay? The idea is that you were introduced to the idea and now you've made it your own. That's the key. There's such a big, big difference between those two things. And I think you and your wife will probably be way bigger believers as time goes on. But you got to give yourself a chance, you know. Just, again, be kind of careful with the market. Don't get too crazy. Work on other pillars of the portfolio as well. Make sure you guys are up to speed on the debt piece. Make sure you guys are always contributing to cash. Always keep that. Cash is king, okay? It's the only cliche that I say on the Independent Investor channel, but it's legit. And it goes against what a lot of the traditional brokers will roll out because, again, remember, they want it all. They know that you're in a position of power if you have cash on the side, ready to deploy if the market takes a sizable downtick. And acknowledging that the market is down 10% and taking a little stab at the market is not timing the market, all right? It's not. It's just acknowledging that it's 10 points down and now might be a good time to expose a little bit more cash to it. If it continues down another 20, there's another acknowledgeable tick down, then maybe we can put a little bit more in, right? Then we get a little bit more aggressive on backfilling our cash at that time as we're transferring that money smartly into the stock market. M1 allows you to do that. It allows you to do it in a really, really efficient way because it'll continually keep you on track, rebalancing your allocation within your portfolio. They do it free of charge. So really good stuff, man. That's honestly kind of one of the comments of the night. That really hits me hard when you say something like that. That's really awesome. I wish you guys all the freaking best. That's all I ever want, man. I have a question about small cap ETFs, VB or VBR. VBR, I know VB is the small cap blend, right? And then there's a couple others. You can either go with growth or value. I'll have to defer that question, Larry. I've always bought the VB, which is the mix between both the value and the growth. I'm not really sure if you're splitting hairs between those three there. If you wanted to go with the safe, go with the VB, which is a blend of the both. If you wanted to be a little bit more aggressive, then go ahead and go with the growth. If you wanted to be a little bit more conservative, then you could go with the value play. But I couldn't give you those tickers right off the top of my head. Kind of get into the end of the live stream here in an hour and a half, but really good stuff. Manda Salva. VB is excellent. Thank you, Joseph. I agree with that. That's pretty awesome. Just had a ton of comments in here. PEG ratio is the price to earnings, the ratio divided by the growth rate. That's right. I got Joseph, my brainchild in the group, man. Awesome. Just awesome to meet. Awesome to meet all you guys. I kind of feel like I know you, but I just came across, and I typically always call out the channel creators. I just came across, I don't know if Dennis from the True Financials experiences this as well in the live streams, but I just had a bunch of comments dump in here on the live chat, kind of toward the end a little bit. I don't know if Dennis just saw me on here live, but he's just kicked in here. I followed Dennis actually since the beginning of his channel. I remember when he started, had some really kind things to say about me. I saw him doing the collab with Lydia. I think it's awesome. At the end of the day, stoking dialogue on investing is so, so important. And again, and I don't know if I've said this before, but Dennis is not as old as me, okay? And I know he's got a spouse as well. And it's really cool. You can kind of get a sense that they're really trying to do the right thing and maybe starting out. And I know I've got a couple in the group here, and I know there's couples that come in as well to the Independent Investor channel. And as quick as you can get this financial thing kind of under control, work really, really hard to get it under control, then you can focus on other aspects of your life, way, way more important than financials. I'm just kind of a dork. I'm into it, but I just saw Dennis in the group here, third channel creator, guys. If you guys watch this video afterwards and you kick over and help and support the channel, I've watched him grow just like I've watched myself grow, and it's kind of cool to see using the power of YouTube to push out a message of empowerment to people. He gives a different delivery, just like everybody, like me or like anybody. But it's kind of cool if you hear something that Dennis says, you know, and it helps you out. I'm all about it. I'm all about it. So really good to see you pop in and say hello. Very cool. Hope you guys have a great President's Day weekend. I'm probably going to get to kind of the end here. I know you guys have dumped in. I wish I had all these questions at the beginning. I don't understand. I thought I was running low after the first hour, but check out Departures Capital with there. I'm going to cruise through here and make sure I don't see. I've got John Darby. Yes to teamwork in the group. Just some killer folks in the group tonight, man. I'm so humbled. Sub to me, not trying to beg. Patrick Coogan. Sub to me, not trying to beg. Man, I used to do that too, man. It's all good. I don't care. I like to see folks grow. Lydia, I think I sponsored her when she was a couple hundred subscribers, maybe. I don't know. I didn't really care, to be honest with you. I liked the message, and she was sincere, and that was good enough for me. Which is kind of the same way I feel about Dennis and starting, you know, him starting to grow the channel too. He's getting to be a sizable channel. He'll be at 10,000 subscribers here fairly quick too. I hope that doesn't, he's probably like, yeah, I'm ready. He's earned it. He works really hard, you know, and that's cool. That's all I ever want for folks. Find a little success as long as the folks that are consuming the message are enriching their own lives. Because at the end of the day, a channel creator is one person. And honestly, I don't look at the world as being one person standing in front of 5,000 people, not making an impact on any of them. I want to make sure that there's an impact. Okay. There has to be an impact. I'm not doing YouTube to waste my time. I'm not doing it to waste yours either. Okay. Very, very important that we're making an impact. Interesting, Joseph. What is this I'm looking at? So guys, I think I'm going to kind of wrap it down a little bit. I'm going to make sure that I hit all this. I've got Jennifer Blaze in the group here. I don't know if I missed some of these questions here. Some of the best dividend stocks. Now I see it. I got Hector Mendoza in here. He's a long-standing friend of the channel as well. CVS. You guys are throwing this dialogue right here. I think a lot of people review this and pick a lot of stock ideas out. And a lot of people were asking me, well, how do you research stock? I don't know, just become more aware of the freaking stock market. You know, you want to succeed, learn yourself up a little bit, pay attention. And again, you don't have to look for those secret sauce stocks. I don't believe in any of that. You know, we've had a pretty good discussion tonight about CVS. Okay, great investment. Okay, it's not a secret. They're on every street corner. Okay, they exist. Ever think about them as an investment? Now you got it. Okay. Now you're getting the idea. Okay. There's nothing wrong with approaching your awareness to the stock market in that manner, because some of the best investing ideas here. We've got some of this Hector Mendoza's throwing out Ford, IBM, General Mills, United Technologies, J&J, Pepsi, McDonald's, United Technologies, Procter and Gamble. So a lot of good names there. Coke had a bad quarter. I'd look at Pepsi. If you're going to go into the bottling and distributing, I kept my position in Stars, Constellation brands as well. I actually like the products that they sell. I think Coke is strong long term, but again, they did disappoint this time around, which was a little bit concerning. From a global perspective, they are huge. They've got Coca-Cola bottling, which is the European play with Coca-Cola, but yeah, that's a little disconcerting there with Coke, and I don't quite understand the valuation there with Coke. Pepsi does trade at a pretty rich valuation as well, so just be kind of careful with some of those names as well. It'd be an uphill battle. I just want to cruise through some of these guys and make sure I'm cherry picking the good ones. They're all good. I just want to make sure there's something in here that's that somebody doesn't need some help. United we stand. I love it. In Andrew Trapman, who did, I think, just started a channel as well. Got to kick over and check that out. Jennifer, thanks for coming in. Thanks for your question. Larry's awesome. I'm glad he got back to you there. Joseph joined. Okay, good. Just started watching you over the last week. Thanks for teaching me. And what I've learned is appreciated. That's the key, really. I try to deliver the message in a lot of different ways, so you can really take and deploy for yourself. That's the whole idea. That's all I ever want. I don't want one last person to just hear what I say and look at the intensity of my research and just go and deploy that on that's silly. Okay, it's not going to make any sense to you. You're not going to know why you're doing it. You're going to question what you're doing, and you're going to fall and you're going to falter. Okay, you got to make this stuff make sense to yourself, to whatever level. Okay, and when you're talking about hundreds of thousands of dollars, the game changes a little bit, in that you kind of got to be on your game a little bit with the plan that you've defined. This is your definition time right now. Dennis popped into the group. I had the young couple in here. I spoke a little bit about me and my wife as well. We're still evolving and defining, okay? Don't shy away from that evolution of yourself and your financial awareness. Don't be afraid to change. Don't be afraid to be a little bit creative as well. I know Dennis talks about some of that stuff on his channel as well. That's important. Creativity is very, very important in finances. And also, have some fun, okay? Financial savvy, if you do it right, is fun. It really is. It's so it's so enjoyable having a good handle on your finances. Very, very important, but it can be very, very fun, and it can be very, very fulfilling as well. All right? I'm gonna cruise down here, take one last look here, guys, and make sure you guys just dumped a ton of questions here on the end here, 141. So I did go up to time this time. Pelosi will, oh God, now you're getting into politics. I'm going to cruise on down past the politics. You guys can hammer it out. Same about those mall stores who spend $2,000 on jeans and shirts. So I think Dennis heard my comment. I don't know. I just think I see these people carrying these bags. I'm not saying I never go to the mall and shop and buy anything. But holy smokes, man, people are crazy. But yeah, and it will last me a couple of years. That's really cool. Let me make sure I kind of get to the end here with some of these. No weed sucks for me. It's about money. Yeah. I just finally, I have an opportunity to give a shout out to a good friend of my channel as well, Average Joe Investing as well. Dave is on here as well. So if you guys are coming to the live stream for the first time, I'm going to end on that note. I would love to. It was kind of the theme of the night tonight, really, is teamwork. And I don't want you guys to take the negative connotation or the negative criticism that I offer on some of the bigger channels, okay? I offer that criticism in a constructive manner, okay? They can criticize me if they want. I could care less. But the constructive criticism is justified in some cases, all right? I wish some of them the very best. As long as people are consuming that content and they're getting something positive out of the message, then I'm all for it, okay? Great to have Dave in the group. Thank you to the other channel creators who come in and help stoke up the dialogue. Thanks you guys for making this another great live stream. I really, really enjoy it. I told you finances is fun. It's one of my favorite topics. And when I come in and I'm a guest of some of those other live streams, it's hard for me sometimes to keep my mouth shut, because I really do think there's a lot of potential to reach a lot of people through YouTube. And in all seriousness, there is a lot of people out there who need to hear this stuff. They do. And if they don't resonate with my message, certainly give some of the other channels a try. Dave, AJI, and Dennis, and some of the other guys, Lydia that's come in the channel, and finally Brent with the financial investor as well. But at the end of the day, we just want to see everybody take on an enriching message that empowers your financial future. So guys, on that note, I'm going to end it. Have a great 3-day weekend. Enjoy your President's Day on Monday, and we will catch you guys next Friday for the 42 live stream as well. Have a great weekend. We will see you next week. Thanks a lot, guys.